Nobody is officially evacuating these towns. There's no emergency broadcast, no sirens. But the people are leaving anyway. 11 Florida coastal towns are in the middle of what you could call a slow-motion abandonment. Insurance companies are fleeing the state. More than 30 carriers have either left, gone bankrupt, or stopped writing new policies since 2022. Farmers Insurance pulled out and left 100,000 policyholders scrambling. State Farm stopped writing new business. Hurricanes are hitting the same towns over and over, and the ocean itself is creeping into the drinking water supply, one well at a time. We've got a town of 720 people that took 9 feet of storm surge and lost a quarter of its homes in one night. A barrier island where boats ended up in people's living rooms, a set of condos where residents are getting hit with special assessments of up to $400,000 per unit because the building might literally collapse. And the Florida Keys, where county officials have openly said they cannot save every road and every neighborhood from the rising tide. Subscribe now because this list gets worse as it goes, way worse. Number 1 is genuinely terrifying. Let's go. All right. Let's count them down. Number 11, Apalachicola. Apalachicola sits on the Florida Panhandle, a quiet little town on the shores of the Gulf of Mexico that most Americans have never heard of. It's the kind of place with Spanish moss hanging from the oak trees, clapboard houses on narrow streets, and a commercial fishing dock that's been operating since before the Civil War. For generations, this town's identity and economy were built on one thing: Apalachicola Bay oysters. At its peak, the single bay was responsible for producing about 90% of Florida's oysters and roughly 10% of the nation's entire supply. Families passed oystering down like a trade. Restaurants in Tallahassee and beyond built menus around Apalachicola harvests. The town wasn't rich, but it worked. Then the bay collapsed. Years of water management disputes with Georgia, combined with drought and environmental degradation, destroyed the oyster habitat from the inside out. Of the roughly 10,000 acres of productive oyster beds that once defined this bay, only about 500 acres remain today. That is a 95% decline. In 2020, the state of Florida shut down wild oyster harvesting in Apalachicola Bay entirely. The restaurants that used to serve fresh local oysters started importing them from Louisiana and Texas. The oystermen who stayed found odd jobs and waited. The ones who left aren't coming back. A limited reopening of the bay was approved for January 2026, but everyone in town understands that a few hundred acres of recovering reef won't rebuild an economy that lost its backbone. You can't revive a generational industry with a fraction of the habitat. The oystermen who remain are essentially betting their livelihoods on a bay that science says may never fully recover, especially with ongoing water disputes upstream. And on top of the economic collapse, Apalachicola faces sea level projections of nearly 1.7 feet by 2040, according to FSU's Florida Climate Center. For a town that's already hollowed out financially, even modest coastal flooding becomes a finishing blow. When the money's gone and the water's rising, that's not a town with a bright future. That's a town running out of clock. Number 10, Crystal River and Homosassa. Florida's nature coast is one of those stretches that still feels like the old Florida your grandparents talked about. Crystal clear springs, manatees drifting through waterways so calm they look like glass. Old bait shops and family-owned seafood joints with hand-painted signs. Crystal River and Homosassa sit side by side on this stretch of Gulf coastline in Citrus County, and for a long time, they felt immune to the chaos happening further south. Hurricane Helene ended that feeling permanently in September 2024. NOAA's official Helene report confirmed that storm surge inundated at least 300 homes in Crystal River and Homosassa, springs with water reaching up to 5 feet deep inside the houses. Emergency crews conducted 85 rescues across the area. Local officials reported estimated surge heights of 8 to 10 feet in some neighborhoods. Water was waist deep in streets that had never flooded before in living memory. And Helene wasn't even the first blow. Hurricane Idalia had already struck the same coast in August 2023, and the damage from that storm permanently flooded Crystal River's City Hall. Not temporarily flooded, not water damaged, permanently rendered unusable. When a city's own government building drowns and stays drowned, you are looking at a place where the infrastructure cannot keep pace with what the Gulf is throwing at it. Crystal River is low, flat, and fully exposed to the open water, with virtually no barrier islands to absorb incoming surge. Homosassa sits on the same coastal profile, a community built at sea level in an era when sea level felt like a permanent number. It no longer is. What makes the nature coast particularly vulnerable is that it never had the tourism tax base or the population density to fund the kind of massive infrastructure upgrades that Miami or Tampa can at least attempt. There are no $100 million seawall proposals for Homosassa. Nobody is designing elevated pump stations for Crystal River. The storms are going to keep returning to this coast, and each one finds a community with a little less money, a little less insurance coverage, and a little less ability to absorb another hit. Number 9, Treasure Island and Madeira Beach. These two barrier island communities sit just west of St. Petersburg in Pinellas County, and they share a problem that goes beyond flooding. They share FEMA's 50% rule, and it is quietly destroying homeowners. Here's how it works. If your home sits in a special flood hazard area and sustains damage exceeding 50% of its assessed market value, you are not allowed to simply repair it. FEMA requires you to rebuild to current flood code. In practice, that means raising the entire structure on pilings, often 12 feet or higher. The cost of that elevation can exceed the value of the house itself. At a packed town hall meeting in Madeira Beach after Hurricane Helene, residents heard the math laid out in brutal detail. One homeowner learned that their $200,000 home could only receive approximately $82,000 in total repairs. Anything beyond that threshold meant a full elevation requirement. And good luck finding a contractor on a barrier island who will lift your house for under 6 figures. Helene's storm surge deposited boats on front lawns across Treasure Island, not kayaks, actual fishing boats. Madeira Beach alone hauled out 66,725 cubic yards of storm debris in the cleanup. Many of the homeowners on these islands are retirees who bought their places 20 or 30 years ago when the insurance was affordable, and the storms felt like once-a-decade events. Now they're staring at repair bills that exceed what they paid for the house in the first place, insurance premiums that would make a Wall Street banker wince, and a FEMA rulebook that essentially says you can't fix your home without spending more than it's worth. Some of these families are choosing to walk away entirely, selling damaged properties for whatever someone will pay, and moving inland. The people replacing them, if anyone replaces them at all, are investors buying damaged lots at a discount and gambling that the next big storm is still a few years out. If you're finding this genuinely useful, tap that like button. It tells the algorithm to show this to more people who are researching where to live or retire. And trust me, the back half of this list is where things get truly alarming. Number 8, Yankeetown. If you've never heard of Yankeetown, Florida, you're not alone. It's a tiny fishing village tucked along the Gulf Coast in Levy County with roughly 619 permanent residents. The kind of place where the post office doubles as the community bulletin board and the biggest news of the week is what somebody caught off the pier. Quiet. Simple. The last place you'd expect to show up on a list like this. Then Hurricane Helene brought an estimated 12 to 13 feet of storm surge to Yankeetown. Absorb that number for a moment, 12 feet of water in a town where most structures are single-story homes and old Florida cottages. Actual water depths inside homes ranged from about 28 inches in the luckier houses to roughly 7 feet in the worst areas. 20 residents were pulled from their rooftops by rescue teams during the storm. After Hurricane Idalia had already hit this same area just a year earlier, FEMA listed 17 homes across Levy County as unlivable, and most of those addresses were in Yankeetown and Cedar Key. This town doesn't have the tax base to rebuild seawalls or install pump stations. It doesn't have the population to attract big federal infrastructure dollars. And it definitely doesn't have the political clout to get its name into a congressional spending bill. Yankeetown is a place of 600 people absorbing storm damage designed to overwhelm cities of 600,000. The math is brutal, and it doesn't improve with time. Each storm leaves the town a little weaker. Each recovery stretches a little longer. Each insurance renewal becomes a little harder to justify, and each time, a few more families decide that rebuilding a third time just isn't worth it. Number 7, St. Pete Beach. St. Pete Beach used to be one of the most celebrated beach towns in America. TripAdvisor consistently ranked it among the top beaches in the country. Beautiful white sand, warm shallow Gulf water, golden sunsets over the Barrier Island skyline. People retired here, couples honeymooned here, families built vacation memories here for decades. Then hurricanes Helene and Milton hit Pinellas County back to back in late 2024, separated by barely 2 weeks. Nearly every single property on St. Pete Beach sits inside a special flood hazard zone, which means FEMA's 50% rule applies across virtually the entire town. And the population numbers from the aftermath tell a story that tourism brochures never will. According to U.S. Census estimates released in March 2026, Pinellas County lost 11,834 residents between July 2024 and July 2025. That is the second largest county population drop in all of America. Only Los Angeles County lost more people, and LA has roughly 10 million residents. Pinellas had under a million. The barrier islands in Pinellas are particularly vulnerable because they sit low, face the open Gulf with limited protection, and have narrow evacuation routes that turn into parking lots when a storm is coming. One bad hurricane and you're trapped on a sliver of sand between the Gulf of Mexico and Boca Ciega Bay. After 2 major storms in 2 weeks, a lot of residents concluded that being trapped in traffic somewhere in Tennessee sounded a whole lot better than being trapped in floodwater on a Pinellas barrier island. And for the ones who stayed, the financial picture got worse in a hurry. Post-storm insurance renewals came in at numbers that made longtime residents physically ill. Properties that were once worth $500,000 are now sitting on the market with price cuts that would have been unthinkable 3 years ago. The beach is still gorgeous. The problem is that gorgeous doesn't fix your plumbing when it's been underwater twice in 2 weeks. Number 6, Fort Myers Beach. This is where the list shifts from concerning to devastating. On September 28, 2022, Hurricane Ian made landfall near Fort Myers Beach with a storm surge reaching approximately 15 feet. The National Hurricane Center documented roughly 900 structures totally destroyed and another 2,200 damaged. Multiple reports estimated that approximately 97% of the buildings on Fort Myers Beach were damaged or destroyed. That is not a neighborhood. That is not a block. That is essentially every building in the entire town. Fort Myers Beach had around 6,000 year-round residents before Ian. Within 6 months, estimates suggest only about a third or fewer had been able to return. The rest scattered across Lee County and beyond, sleeping in extended stay hotels, doubling up with family members, or living in FEMA temporary housing units. The ones who wanted to come back faced the same devastating 50% rule. If your home was substantially damaged, FEMA required elevation to 12 feet or higher. For a retired couple living on Social Security in a paid-off bungalow they bought in 1998. That's not a renovation project. That is financial ruin wearing a hard hat. Lee County insurance premiums jumped 47% between March 2022 and September 2024. The median home sale price on Fort Myers Beach briefly spiked past $1 million after Ian, not because the homes got nicer, but because the land underneath the rubble was suddenly the only thing left with any value. Since then, prices have started dropping back as the reality of the rebuild costs settles in. Fort Myers Beach is technically in the process of coming back, and some of that progress is genuine. Hotels are reopening, a handful of new elevated homes are going up, but what's being rebuilt is a fundamentally different town, smaller, more expensive, built higher off the ground, and still sitting on the exact same barrier island at the exact same elevation, facing the exact same Gulf of Mexico that destroyed it. The geography didn't learn any lessons, only the bank accounts changed. Number 5, Braden and Beach on Anna Maria Island. Anna Maria Island sits right at the mouth of Tampa Bay, a narrow 7-mile barrier island split between 3 small cities. Braden and Beach occupies the southern tip. Before Hurricane Helene, this was one of those hidden gems that travel writers love to whisper about. Old Florida character. Charming beach cottages, painted in pastels, no high-rises, no chain restaurants, just pelicans and sunsets. When Helene made landfall in September 2024, local officials estimated that 90 to 95% of Bradenton Beach was destroyed. In the immediate aftermath, the only way to reach the island was on foot or by boat. State highway crews described clearing unprecedented volumes of sand deposited across every road and parking lot. This wasn't typical wind damage from a passing tropical system. This was the Gulf of Mexico physically reshaping a barrier island with billions of pounds of storm surge. The terrifying detail about Anna Maria Island is that its geography hasn't changed since Helene. It is still low, it is still narrow. It is still sitting directly in the path of anything that enters Tampa Bay from the south. The storm that leveled 95% of Bradenton Beach was not a once-in-a-century anomaly. NOAA's own data shows that major hurricanes in the Gulf have been intensifying faster and hitting harder over the past 2 decades. The storm that destroyed Bradenton Beach will not be the last storm to find Anna Maria Island. And each time one arrives, the rebuilding costs more, the insurance gets harder to find, and the fundamental question of whether it makes sense to keep rebuilding at all gets harder to ignore. If you've made it this far, you're clearly someone who takes where you live seriously. Do me a favor and subscribe. I break down the best and worst places to live in America every single week, and the final 4 entries on this list are the ones that should genuinely change how you think about Florida real estate. Number 4. Sanibel Island. Sanibel was Hurricane Ian's ground zero. When that storm made landfall, every news helicopter in America pointed its camera at the same image. The Sanibel Causeway, the 3-mile bridge connecting the island to the mainland, had sections of road simply missing, vanished into the Gulf. For days after the storm, Sanibel was completely cut off. No electricity, no fresh water, no way in or out except by helicopter or boat. It looked like footage from a disaster movie, except the credits never rolled and nobody got to go home. The permanent reconstruction of that causeway cost $328 million and wasn't fully completed until mid-2025. 3 years and $328 million for a single bridge to a single barrier island. And even with the road back, recovery has crawled. As of early 2025, Sanibel was estimated to be operating at roughly 20% of its pre-Ian capacity. 8 out of 10 of what this island used to be just gone. Insurance was already expensive before Ian, running about $6,000 a year for larger Sanibel homes. After a direct Category 4 strike, the risk profile of the island changed permanently in the eyes of every underwriter in the country. The premiums now reflect what Sanibel actually is, a barrier island that took a worst-case hit and spent years trying to stitch itself back together. For anyone thinking about buying on Sanibel today, the math is sobering. Your insurance alone might cover rent in half the metro areas in America. That's not paradise pricing. That's a warning sign with palm trees. Number 3, Miami Beach. Miami Beach is probably the most famous name on this list, and the one people are most surprised to see here. It's glamorous. It's loaded with luxury high-rises, celebrity restaurants, and billion-dollar condo developments. The Art Deco district. South Beach. It feels invincible. It is not. Researchers at the University of Miami documented that after 2006, tide-induced flooding events on Miami Beach increased by more than 400%. The city went from about 1 serious sunny day flood per year to roughly 4. Not hurricane flooding, not tropical storm flooding. Just regular high tides pushing seawater backwards through the storm drains and onto the streets of one of the most expensive zip codes in the Western Hemisphere. Florida International University researchers project that by 2030, Miami Beach could be dealing with 30 to 40 of these high tide flooding events every single year. The city is spending $80.3 million on a seawall program alone. But the threat extends far deeper than surface flooding. In nearby Hallandale Beach, 6 of 8 municipal drinking water wells have been permanently shut down because the Atlantic Ocean has contaminated the underground aquifer with salt water. About 85% of Hallandale now sits in zones where salt water has already crept in below ground. A well in Boynton Beach tested at 16,050 milligrams per liter of chloride, which is roughly half as salty as the actual ocean. When your drinking water tastes like the beach, You have a problem that no seawall can fix, and layered on top of the water crisis is the condo crisis. After the Surfside Tower collapse in 2021 that killed 98 people, Florida passed laws requiring milestone structural inspections and full reserve funding for older condo buildings. The financial fallout has been staggering. Special assessments of $20,000 to well over $100,000 per unit have become common. One complex called Mediterranean Village in Miami, Dade, faced assessments reaching $400,000 per unit. Median monthly condo fees in the county jumped about 60% between 2019 and 2023, climbing from $567 to around $900. Condo listings across South Florida surged roughly 28% year over year as panicked owners raced to sell before the next round of assessments landed. And the 2025 milestone inspection report flagged 24 structures statewide as unsafe, with 23 of those buildings located in Miami-Dade County alone. Miami-Dade recorded the largest domestic population loss of any Florida county in 2025, with nearly 73,000 more residents leaving for other states than arriving. The glamour is still there. The Instagram sunsets still look incredible. But underneath the surface, the foundation is cracking in ways that are measurable, accelerating, and deeply expensive. Number 2. Key West and the Florida Keys. The Florida Keys might be the most beautiful stretch of road in America. The overseas highway, turquoise water on both sides, that feeling of driving to the edge of the continent. Key West, at the end of the line, Hemingway's old haunt, Jimmy Buffett's spiritual home, sunset at Mallory Square with the buskers and the tourists, and the feeling that you've reached a place where the rules don't quite apply. Living there, though, has become financially impossible for almost everyone who isn't already wealthy. Home insurance in Monroe County averages somewhere between $9,835 and $25,080 per year, depending on coverage levels. Citizens Property Insurance wine premiums in the Keys run about 175% higher than the median coastal rate statewide, and they've roughly doubled over the past decade. At the high end, insurance alone costs over $2,000 per month. That is a full mortgage payment in most American cities just for the right to keep living in a house you already own. And the infrastructure picture is somehow even scarier than the insurance. Monroe County conducted a study on what it would cost to elevate its roads above projected sea levels and concluded that it simply cannot afford to save them all. Raising less than 3 miles of Old State Road 4A on Sugarloaf Key was estimated to cost $75 million under near-term conditions and up to $181 million under a higher scenario for 3 miles of road. The county has over 300 miles of vulnerable roads. $60 million per mile doesn't scale to 300 miles. It doesn't even come close. County officials have openly discussed a policy of managed retreat, not as a worst-case hypothetical that might happen someday, not as a line in an environmental report that nobody reads, as an actual planning framework being presented at public meetings and discussed in county commission sessions. The areas facing the most immediate risk include Bayside neighborhoods in Key Largo, Sugarloaf Key, and Big Pine Key. When your own local government is publicly acknowledging that they may have to let the ocean take certain neighborhoods because the math to save them doesn't work. You are not living in a stable real estate market. You are living on borrowed time on a beautiful, expensive, and slowly sinking chain of islands. Number 1, Cedar Key. Cedar Key is a tiny island off the Gulf Coast in Levy County, home to about 720 people, artists, fishermen, retirees who found this place decades ago and decided the rest of the world could keep its noise. The main drag has a general store, a handful of restaurants, and views of the Gulf that would make a real estate photographer weep. Cedar Key is the kind of town where the sunset is the nightlife and everybody's on a first-name basis. And then the hurricanes came. Not 1, 3, in 13 months. Hurricane Idalia hit Cedar Key in August 2023. The NOAA tide gauge measured 6.89 feet of water above normal high tide. The town had never experienced anything like it. Residents spent weeks hauling waterlogged furniture and drywall to the curb. They cleaned up, repaired what they could afford, and tried to get back to normal. Then came Tropical Storm Debbie in 2024. More flooding, more damage, more exhaustion. And then came Helene. In September 2024, Hurricane Helene pushed a wall of water across Cedar Key that the NOAA tide gauge measured at 9.3 feet above normal high water. That shattered every record on a gauge that has been in continuous operation since 1914. 110 years of measurement, and Helene produced the highest water level Cedar Key has ever recorded. A quarter of the homes on the island were destroyed that night. 1 out of every 4 houses gone in a matter of hours. Inside Climate, News used the phrase existential crisis to describe what Cedar Key faces now. Not a setback, not a challenge, an existential crisis. The kind of language reserved for situations where survival itself is the question on the table. 720 people on a small Gulf island, 3 major storms in barely over a year. 25% of the housing stock wiped out in a single night. Insurance premiums that working families on a fishing island cannot absorb no matter how many hours they work. And the sea level projections from NOAA and FSU that guarantee the Gulf is going to keep rising and keep coming back higher each time. The next record won't take 110 years to set. It might not even take 10. Cedar Key is still there. Residents are still trying to rebuild, and that resilience is genuine and worth respecting. But the numbers tell a cold story. When the storms arrive faster than the rebuilding can finish, when the insurance costs more per year than many of the homes are worth, and when the ocean keeps setting new records every time it visits, the question stops being whether Cedar Key can bounce back. The question becomes how many more times it can, and that question isn't unique to Cedar Key. Every town on this list is asking some version of it right now. The water keeps rising, the insurance keeps climbing, the storms keep getting stronger, and the people keep doing the math and deciding the answer is somewhere else. The real question isn't whether these towns will flood again. Of course they will. The real question is who's still going to be there when the water pulls back. If you're thinking about moving to Florida, retiring to Florida, or investing in Florida coastal property, do the homework that most buyers skip. Check the FEMA flood maps. Get an actual insurance quote before you make an offer. Look at the elevation of the lot, not just the view from the balcony. Ask what the condo association's reserve fund looks like, and check whether the dream town you're browsing on Zillow showed up on a list exactly like this one. Florida is still a beautiful state. Nobody is arguing that. The sunsets, the warm water, the palm trees swaying over white sand, all of that is real. But beauty doesn't pay your insurance premium. Beauty doesn't pump the salt water out of your well. And beauty doesn't rebuild your house after the 3rd hurricane in 13 months. I'll see you in the next video. Click the one on screen now for more on the best and worst places to live in America right now.